for those of us who have a lot of managed long-term care, which is really what we focus on, assisted living, skilled nursing, independent living, we're in a situation now where the baby boomers are starting to approach 80. The oldest baby boomers will start turning 80 next year. And this is where we're really seeing demand for long-term care grow. And we've had a 6-year period with very little new supply being built.
I'm here today with Danny Prosky, President and CEO of American Healthcare REIT. How would you describe fundamentals in your sector, and how is American Healthcare REIT positioned to respond?
So I've been in the healthcare REIT space for almost 33 years, and this is the best environment I've seen by far. And I know people probably say that a lot, but for those of us who have a lot of managed long-term care, which is really what we focus on, assisted living, skilled nursing, independent living, we're in a situation now where the baby boomers are starting to approach 80. The oldest baby boomers will start turning 80 next year. And this is where we're really seeing demand for long-term care grow. And we've had a 6-year period with very little new supply being built. Starting in 2018, supply dropped significantly, dropped even further in 2020, 21 due to COVID. And even the last few years, construction costs are up, lending's down, interest rates are up. You've seen very few construction starts within long-term care, right during a period of time where there's been tremendous growth in demand. So occupancies have been way up, not just for us, but across the sector. RevPOR has grown. As you get more occupancy, you're able to grow your revenue per room. So it's really been good. And I think we're very, very optimistic about the next few years as well. The aging of the population is here to stay. And I think it's going to be a little bit of time before construction starts to pick up. So we're very, very bullish. We've had a great year, and we think the next couple of years are going to be very strong as well.
And how would you describe the capital markets landscape for American Healthcare REIT today, and how is it impacting your plans for the year ahead?
We've had a very busy year from a capital markets perspective. As you probably know, we IPO'd in February. We raised additional money through a follow-on in September. And just yesterday, we filed an ATM for $500 million, which I think you're going to see some activity on very, very soon. The capital markets are good. Our stock has increased substantially since our IPO. I think the market understands the growth story within companies like American Healthcare REIT. We've had very good earnings growth this year. I think, we're not providing guidance for next year, but our expectation is we'll see very strong earnings growth in 25 and 26 because of the fundamentals that I mentioned. And I think the market recognizes that and has rewarded us with a rising stock price and readily available capital to grow. So I think there's more to come. We had a lot of external growth this year. I think you can continue to see that for the next several years.
And as you meet with investors here at REITworld, are there common questions or issues that you're responding to?
I think that there's been a lot of them regarding healthcare in general. What's the future for healthcare with the new administration coming in? Can we maintain this level of both organic and external growth? I think those are probably the biggest questions. Most of the people we've met with a lot this year because of all the fundraising we've done. We've had multiple roadshows, so people understand the firm really, really well. It's really a question, I think, in their minds is, can we continue to do what we've been doing for the next several years? And I feel very, very confident that the answer is yes.